morning, Kane. How are you?
Good morning. How are you?
I'm great. Happy Cinco de Mayo.
Oh, ole.
I wore my Spanish shirt today in honor.
Cool.
Yeah. So, well, what a day. We've got more listings, which is fantastic. We have an extra day of inventory now, 27 days. So we added a day. Yes, that's the good thing. And with the median price at $475,000, we have 43 new listings that are 475 and under for a total of 715 listings 475 and under. So that's great. And what we have to, and I think that that's happening because of the equity people have gained because of the increase in their what I call dead money, their equity. So people
Dead
are
money? Sounds
dead
kind of
money.
morbid, Ruthie.
Well, it is, and you shouldn't have it. So that's why you should sell and buy, and you have more money to put down. So I don't want everybody to freak out because of the increase in interest rates, which we're going to talk about. Hi, good morning, Karen. I haven't seen you, my dear. Love you, love you. There's my favorite, Karen. Good to see you. So yes, let's talk a little bit. Is Jimmy on his way?
Jimmy is just now coming in with all his stuff. So everyone, please welcome Jimmy Dag. Yay!
He's going to be flying in. Flying in. Good morning, Jimmy.
Good morning.
How are you?
Good. I'm putting in my ears.
Good. Put your ears in.
Okay.
Everybody should be putting their ears in.
Yeah. Now I'm like Mickey Mouse. My ears are in.
Hey, Karen, you've been lazy. Well, it's time to get crazy, not lazy, right? Oh, you've been crazy, not lazy. Got it. That's a good thing. It's better than being lazy. So crazy, yes. Businesses, agents are wondering what's going on. The interest rates went up, but we're going to talk about that. Jimmy, we've got 715 homes, 475 and under. And so that's given us a total of 27 days of inventory, which is one more day than we had yesterday. So that's a good thing. And we're selling more homes this year than we sold last year. And so that's another good thing. We're selling 94 homes a day right now in the first 4.5 days of May. And last year we were doing 84. So life is good in the real estate world. And oh my gosh, Karen, you just returned from Peak Experience. It was fantastic. I bet you're energized and ready to go, ready to rock and roll. That's fantastic. Good for you. Congratulations. Really. And that was that in San Diego or Phoenix? Let us know, Karen. Yeah. So, Jimmy, let's see. What are we doing today here? Let's get rid of this and put you down there, put you back up there. It has been a whirlwind day for me. And it's Cinco de Mayo, everybody, as we were talking about. And that's a good thing, right? We love that. But in addition to Cinco de Mayo, which is the 5th of May, which is a holiday, and I'm going to read what the Wikipedia says. It celebrated the date of the Mexican Army's 1862 victory over France at the Battle of Puebla during the Franco-Mexican War. I had no idea. The day, which falls on Thursday, May 5th in 2022, is also known as the Battle of Puebla Day. And while it is relatively a minor holiday in Mexico, in the United States, Cinco de Mayo has evolved into a commemoration of Mexican culture and heritage, particularly in areas with large Mexican-American populations. All good, right?
Yep.
Yeah, I mean, I think that's great. I love it. I mean, people really celebrate. And then the other thing I wanted to tell everybody that maybe you don't know is on May the 5th, 1961, Navy Commander Alan Bartlett Shepard Jr. is launched into space aboard the Freedom 7 space capsule, becoming the first American astronaut to travel into space. And the suborbital flight, which lasted 15 minutes and reached a height of 116 miles into the atmosphere, was a major triumph for the National Aeronautics and Space Administration. Did you know that?
I didn't know that.
I know. I didn't either until this morning. And I'm thinking, oh, wow, we have two things to celebrate. Two things. And Karen just told us that she went to Carlsbad. And Buffini also made some predictions about the market. Oh, my gosh. Karen will have to get you on the show to tell us. So let me know when you're ready. Today, tomorrow, Monday, let me know. I want to hear. We want to hear straight from your mouth, right? Since you were there. So Jimmy, the world is rocking and reeling a little bit about the increase in interest rates. And I don't think they've raised them that much, 0.05%, I guess, or 0.005. What is it? Karen says, let me recover first. No doubt, we will. But we look forward to it. Something to live for.
3% since December, 3 full percent, from less than 3 to 6.
Yes, yeah.
On a $500,000 house, that's $15,000 a year more in interest per year.
Per year.
Right.
So what I didn't have a chance to do today, let's see if we can read this. I'll read it. I don't know if you can see it, but it says the Federal Reserve ruled out a 0.75 move higher in interest rates. The central bank's chief commentary took steam out of market speculation that the Fed would further ratchet up its pace of tightening. The commentary that this particular author is referring to coincided with the Fed's decision to raise short-term interest rates by 0.5%. The Fed has not increased interest rates in increments larger than 0.25% since May of 2000. Powell said further that the 0.5 moves should be the table of the next couple of meetings. What do you think that means? Should be on the table.
In other words, they will move 0.5 point. A quarter of a point's not enough. They're taking more aggressive moves with interest.
Yeah, the Fed watchers had expected the central bank to move by 0.5 point this week. Markets had begun pricing in the odds of 0.75 moves in future meetings. Last month, Bullard said the Fed should rule out a 0.75 move, although he did not see the case for one at the moment. So what is the number that you said? 15,000
on a $500,000 house? Yeah, 3% interest rate difference is $15,000 more a year in interest. Then so if the house went up 25,000, when it raised for 3%, you got the whole 25,000. Now that rates are 6, you don't get the whole 25,000. You get 10 of it. The other 15,000 goes towards interest.
Okay, I say that. Break that down for us.
Okay, if you bought a $500,000 house in December,
yes,
your payment was $15,000 a year less.
Okay.
So if the house went up $25,000, that was your $25,000. If it goes up $25,000 next year, if it appreciates 5%, that's $525. It went up $25,000, but you're paying $15,000 more in interest over the year. So you're getting $10,000. It's still a profit as long as houses still go up 5% or 6% a year. You're still going to make money, but not nearly as much as you were at 3%.
Well, that's what I didn't have time to figure out this morning. So I'm so thrilled that you did that, because I think that we have to unpack it to the buyers and in those types of terms. The other thing that I wanted to do that I didn't get a chance to do was figure out how much more down payment you have to pay so that it doesn't affect you as drastically or at all in increments. You know what I'm saying?
I do. And I don't know what the number is, but obviously at 3%, you could borrow $450, and at 5% or 6%, you can borrow maybe $250,000. It's going to be a big difference. And I know you talked about when you have so much equity, you just put a bigger down payment down. And
yes.
That offsets the difference in the payment.
And so you think it does? Or
No.
You think it doesn't?
No, I think if you have the cash from another house to put it into another house as a down payment, I don't think I think you should borrow the money at 6% and
keep your cash.
Yes.
Yeah. Well, I if you can. Right. If you're going to have a baby and you need another bedroom,
right.
You know, there people don't just buy houses because they want a new house. It's sometimes because they have to.
Mm-hmm.
Yeah, so that's the other thing. Well, interest rates have been higher. We talked about that yesterday. I mean, they've been as high as 7%, and the world didn't fall apart. So hopefully we can figure this out. More houses came on the market, and I think it's because of the equity that they have. And so I like to do the stats every day because I see things change, and I've seen more and more homes that are 475,000 and under come on the market. And I don't think those people are selling and not going to buy.
Right.
And they're probably not going to move to California or Florida. So the odds are that they're going to buy here.
Right.
So
right.
when I see those numbers go up, we now have 715 homes on the market that are 475 and under. I see 715 more buyers is what I see.
Well, hopefully they can qualify at the higher rates.
Well, they have more equity, right? Even this year, their house has gained 10,000 per month.
If they're not a first-time buyer, yes.
Right. Yeah. Well, these are new listings, so if they're buyers out there, they're not first-time home buyers, right?
Right. Once they sell their house, they're not a first-time buyer. Correct. Yes.
Yeah. So, and hopefully, even if they bought it a year and a half ago, they still have, 100,000 in equity gained. Yeah. Or more. So anyway, that's all I have for today, except one other thing. I noticed that for the first time, Open Door has taken number one position this month for the first time over Zillow. And the other interesting thing is that the homes, let's see if I think I did that screenshot. Hang on, everybody. Wrong one. Let me see if I can get it. Hang on. Cancel. I think I printed it, did it. Yeah, here it is. I found it. Okay, let me show everybody. Come on. So, of course you can. Let's see. I'm going to hide you for a second, but you'll be able to hear. Okay, because this is small. And I'll put myself down here. Okay, so what has happened is Open Door has taken over the number one position this month. Now, not for the year, but for this month. But I see what I've been watching, and I like to do the stats to see the trends. Open Door has been inching up in their average price. They're now over $500,000. While Zillow's lagging behind it. Looks like if you average that, it's still going to be maybe 440. But they haven't gotten into the more expensive market, and it looks like to me that that's what Open Door is doing. So I'm going to put you back up here, Jimmy.
Average is 502. That means there's a lot that are above 500.
Yes.
Bring that average up there because they're not buying that many below 400. So.
Right. Yeah, exactly. So anyway, I think that's interesting. And I think everybody needs to start farming. I have to say that because Open Door is getting to your sellers and you're not.
Well, two things. You made a comment. You opened with something. You said we've sold more this year than last year. That means for May only, just for May.
Yes.
Because year over year, we're a little bit less.
Oh, yeah, absolutely.
And so if May is strong, that harbingers well for the rest of the year. Hopefully we'll keep up that pace because I know we talked about reversion to the mean and we expected this year to be, a little bit slower, but still people have a lot of equity. But the other thing is you've mentioned the housing wire thing you're going to have tomorrow. The show's going to go a little bit longer tomorrow. I want to make sure people schedule the time for that because the housing wire conversation, something that if you're in real estate, you should listen to this show tomorrow.
Yes, and if you've heard bits and pieces of it before, try to just listen totally tomorrow. And there's a lot of just wonderful information that will help you handle objections and be the authority, be the expert, and have conversation topics, with people that are asking these questions that you're going to hear tomorrow. Interest rates, inflation, the war, the future, the increase in pricing. They're addressing all these issues and very, very well. It's a very well done show. So tomorrow, 9 o'clock.
9 o'clock. Okay. Got it.
9 o'clock. Okay, Jimmy, I will see you as soon as I can get there.
Okay.
I may be a couple minutes late today.
That's fine. We're all set up. Whenever you get here is fine.
Okay, everybody. It's not too late to sign up, by the way. If you haven't, you can still sign up. We have disclosures and how to understand them. Jimmy's presenting this. It's a new class this year, and it's a great class. It's relevant to what we're doing and to help you be the best that you can be. And Jimmy, I will see you soon. Go to be.vegas and sign up. And Jimmy, you are already there.
It's contracts. They need
Contracts.
contracts. That's what it is.
Yes.
Contracts.